Good day traders, it's Wednesday, 1st of November. This is Alan Hong, market analyst of MY-GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is the dollar index in 4-hourly charts. The US dollar was traded modestly higher against baskets of major currency on Tuesday. It was rose 0.06% to 94.44 and buoyed by a pair of economic reports on manufacturing growth and consumer confidence that topped expectations. So this was pointing to underlying strength in the US economy. Investors' outlook on the US economy remained bullish as consumer confidence rose to its highest level since 2008, and while economic activity in the Chicago area jumped to a 6.5-year high in October. So according to the conference reports, consumer confidence gauge rose to 125.9 in October from 119.8 in September. This was beating the economist's forecast for a rating of 121. So consumer sentiment is the leading indicator of consumer spending, which plays a major role in overall economic activity. So the Chicago Purchasing Manager Index as well was jumped to 66.2 above the September reading of 65.2. That top expectations for a reading of 61. So as a leading indicator of the US economy, the Chicago PMI helped economists measure business activity and new orders. The door of reports comes as the Federal Open Market Committee two-day meeting got underway on Tuesday with an interest rate decision slated for Wednesday. So the dollar has struggled to add to recent gains as investors awaited further clues on the monetary policies from the Federal Reserve and President Donald Trump's choice of candidate to head the Federal Reserve in February. Well, the pound was also surged higher on Tuesday, with GBP/USD added 0.55% to trade at around 1.328 amid growing expectations that the Bank of England will hike interest rates for the first time in more than a decade on Thursday. And the euro was slid to the day's low on Tuesday, down 0.22% at 1.1633 against the dollar after data showing that the Eurozone inflation slowed this month and reinforced the case for the European Central Bank to withdraw stimulus only gradually. So Eurostat reported that the preliminary reading of the Consumer Price Index was rose at an annual rate of 1.4% in October, down from 1.5% in September. So economists had expected an inflation to remain steady at 1.5%. So the ECB targets inflation of close to but just below 2%. So core inflation, which excludes energy and food prices and is closely watched by the ECB, was dropped to a 5-month low of 0.9%. A separate report showed that the euro economy posted its fastest annual growth rate since the beginning of the debt crisis in the third quarters, and this was boosted in part of a strong growth in France. So the Eurozone economy grew at an annual rate of 2.5% in the 3 months to September. The euro area economy grew 0.6% in the third quarter, while growth in the second quarter was revised higher. And at the same time, another report by Eurostat showed that the unemployment rate in the region fell to 8.9% in September from 9% the previous month. So it was the lowest reading since early 2009. The US dollars approached a 3-month high against the Canadian dollar on Tuesday as well, with the USD/CAD pair up 0.48% at 1.2895 after the release of weak Canadian economic growth data weighed on the local currencies, while investors eyed the Federal Reserve upcoming policy meeting as well. So the Canadian dollars was weakened after official data showed that the economy unexpectedly contracted in August after having stagnated in the prior months. So a separate report showed that Canada's raw materials price fell unexpectedly by 0.1% in September. In Australia, the Aussie traded mix in Asia on Wednesday slightly higher at 0.7661, up 0.07% after the release of MY-GKFXPrime manufacturing index came in at 51.1, compared with a previous reading of 54.2. Well, the yen was slightly weaker against the dollar, with USD JPY change hands at 113.87, up 0.19%, amid stronger than expected Japan's manufacturing PMI, which rose to 62.8 compared with a reading of 52.5 seen. And having a tad in commodities markets, gold price was edged up in Asia on Wednesday, rose 0.01% to traded around $1,270.65 a troy ounce, with the upcoming Federal meeting expected to hold steady and investors cautious ahead of non-farm payroll data at the end of the week. So overnight, gold price hovered above session lows, pressured by a rising dollar on the back of a door of bullish economic reports that lifted investors' expectations of bullish US economic growth. So gold prices are sensitive to move higher in both bond yields and the US dollars. A higher dollar makes gold more expensive for holders of foreign currencies, while an increase in US rates leaves the opportunity cost of holding non-yielding assets such as bullion. And crude oil price was gained in Asia on Wednesday, rose 0.51% to traded around $54.66 a barrel, as industry estimates of US inventories boosted sentiments and an on-target PMI reading in China showed the concerns of a slowdown. In Asia on Wednesday, China released the Chinese market manufacturing PMI for October, came in at 51 as an unchanged from September's. So the release followed China's official manufacturing PMI for October that came in at 51.6, which below expectations. Meanwhile, according to the American Petroleum Institute, the API said on Tuesday, the crude oil stock was fell by 5.087 million barrels last week, and supplies at the oil storage hub of Cushing, Olakama, fell by 263,000 barrels, and analysts had expected a 2.575 million barrels dropped. So the API estimates are followed by official data from the Energy Information Administration, the EIA, on Wednesday, and the EIA and API figures often diverge. So overnight, crude oil price settled higher on Tuesday as investors look ahead to inventory data expected to show crude supplies fell last week and the ongoing optimism that OPEC will agree to extend output cuts. So with the upcoming OPEC November meeting edging closer, oil price added to recent gains as investors continue to expect OPEC will extend output cuts through March 2018 amid recent comment from OPEC Secretary General Mohammed Bakindo. So Saudi Arabia Crown Prince Mohammed bin Salman said last week the kingdom will support extending output cuts in order to reach the market excess supplies. And in May, OPEC producers agreed to extend production cuts for a period of 9 months until March, but stuck to a production cut of 1.2 million barrels per day agreed in November last year. And OPEC is slated to next meet at its headquarters in Vienna on November 30. So in the US, meanwhile, traders look ahead to fresh inventory data from the American Petroleum Institute on Tuesday, as well as a further report from EIA on Wednesday, expected to show a decrease in domestic crude inventories. And traders are expected to closely monitor US crude export data due Wednesday as the widening spread between crude and Brent oil prices has pushed US crude exports to record highs in October. So now we're gonna review the highlighted economy data that released on yesterday, Tuesday, as well as today highlighted economic data and events. So yesterday, China has released its manufacturing PMI and it was at 51.6, which is slightly disappointed comparing to the focus of economies at 52. So during European trading hours, the EU has released the consumer price index for October and it was at 1.4% growth, which is slightly lower than the expectations of 1.5%. So during North American trading hours, Canada has released its GDP for August and it was at negative 0.1%, and first time it was dropped to negative territory. So and United States as well was released the consumer confidence by the conference report for October and it was at 125.9. So as for today, we should focus on the data that is going to be released by the United Kingdom, as well as a series of data that's going to be released by the United States tonight during the North American trading hours. Let's move forward to the technical analysis sessions. So first instruments, we're referring to the GBP and USD in 4-hourly charts. So the powers continue to surge higher amid growing expectations that the Bank of England will hike interest rate for the first time in more than a decade on Thursday. So the pair GBP USD was closed above the resistance level of 1.327, and it was a signal for further retracement and move higher in short terms. So it is suggested to move towards the next resistance level at 1.334, and which the Fibonacci retracement level of 50, and also considered as trend direction shifting freehold. So on the downside, we could refer back to the 1.327 as a first support level. While the euro was led to the day low on Tuesday after data showing that Eurozone inflation slowed this month, it reinforced the case for the European Central Bank to withdraw the stimulus only gradually. So thus, the pair EUR-USD traded a tad lower than the resistance level of 1.166. Closing above this level could lead to a short retracement and thus will move higher in short terms. But however, the pair remained its downtrend structure with the both moving average line in 4-hourly charts continue pointing downwards. Thus, closing below 1.16 will open up a door for continuations of downtrends and could fall further towards the next support level at 1.149. The Japanese yen was continued weaker against dollars, with USD JPY extended its upside after rebound from Fibonacci retracement level of 50 at 113. So it remained traded in an uptrend structure suggested by the previous rejection from Fibonacci retracement level of 50, and thus closing above the previous high or 114.3 will suggesting for continuations of uptrends and could surge higher towards the next resistance level at 116 as its long-term target. So on the downside, the first support level comes in at 113.7. As for commodities, gold price remains struggles but between the both moving average line in 4-hourly charts, so it is expected to be traded flat ahead of FOMC policy meetings. But however, it remained its downtrend structure with the both moving average line in 4-hourly chart continue pointing downwards. This closing below $1,260 a troy ounce of previous low will provide a signal for further downsides and could fall towards the next support level at $1,233 a troy ounce. So on the upsides, the nearest resistance levels can be seen at $1,283. Oil price was gained in Asia on Wednesday as industry estimates of US inventories boosted as sentiments and an on-target PMI reading in China softened concerns of a slowdown. So the US West Texas Intermediate crude price continued traded higher after its close above the resistance level of $53.70. So it is suggested to move further higher and could surge towards the next resistance level at $57.20 a barrel as its long-term target. So as for the downsides, we could refer back $53.70 at its nearest support level. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the MY-GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.